Hi there, eToro. It is Monday, the 24th of April, and that means it's time to take a look at what moved the markets last week. Starting off with macro data that was released through the week from Friday till Friday last. There were definitely some interesting data points that hit the market. One of the most interesting data points from last week has to be the GDP growth rate out of China. So it came in at 4.5% year on year, and it was expected to come in at just 4%. You can see from the chart on screen that it is still well below the trend going back till 2014. But of course, the country has just experienced a fairly chunky economic collapse, and so this is a strong sign that recovery is underway. We also got the inflation number out of the UK, and this is still sitting in double digits. It was expected to come in below the 10% mark, but it didn't. UK stocks moved as you would expect on the back of this news. I'm always interested to dig into the details of this type of macro report just to uncover what is driving these particular numbers, whether they be high or lower than expected. The Economist has a pretty good article, if you have a subscription, outlining the details behind this, and it points out that the UK's inflation rate is much higher than those of its peers within the EU region. However, something that it does also call out is that this is a matter of timing. The timing in this case being the timing of lower costs of energy flowing through to consumers. You can read on screen why it hasn't reached the end consumer just yet, but it does look as though that will start feeding through next month and beyond. One incredibly concerning detail with regards to UK inflation is that food inflation is still very, very high. But hopefully the drop in energy costs and also the drop in commodity prices in other areas will start feeding through. Another highlight from last week in terms of macroeconomic data, this piece of data is very closely watched within the US by the Federal Reserve, and that is initial jobless claims. So initial jobless claims, as you can read on screen, is the number of Americans filing for unemployment benefits, and this number came in slightly higher than was expected. Now, what should be obvious from what you can see on screen, the chart on screen, is that this number tends to be volatile. The reason this has been closely watched is that the US would like to see unemployment tick up to reduce pressure on wage inflation, which is a particularly sticky form of inflation within an economy. I'm not going to argue the politics of the Federal Reserve trying to drive unemployment higher, but I'm just saying that this is something that the Federal Reserve is watching quite closely. The trend, as we can see from the middle/end of 2022 until now, is most certainly upwards, although it is quite a zigzaggy journey. One concern that I do see out there amongst economists and analysts is that this number can be slow to get rolling, but once it does, it can move very fast. So the question is, will there be wide-scale unemployment within the US through the next year? And what kind of other challenges would this create within the economy? Obviously, a recession being top of mind. One data point, which is also fairly closely watched, but probably isn't given as much priority as initial jobless claims, is existing home sales within the US. The housing market within the US and many other countries became incredibly overheated, particularly during lockdowns and when there was lots of spare money sloshing around the financial system. One of the most direct effects of increased interest rates is that mortgage rates also increase, and so that really slows down activity within the housing market. It's unlikely that we're going to see a collapse of the real estate market, particularly when it comes to home sales. You can see on screen that the action that the Fed took, and this is similar within other countries, to increase interest rates drove the volume of home sales down very sharply for roughly a period of a year, although it did bump up earlier this year. And now the home sales number that we saw last week looks as though things are heading south once again. The other event, or in this case, set of events that had the ability to move the market last week most certainly would have been earnings, corporate earnings. And you can see on screen that there were a number of large banks reporting earnings. Only a couple of companies from my portfolio were reporting, and I'll talk specifically about those very briefly. The first company in my portfolio that reported earnings last week was Netflix, and they did manage to increase the subscriber count, which was a bit of a surprise, but revenue growth has also slowed. I don't hold a particularly big position in Netflix within my eToro portfolio. I do think that there is quite a lot of risk when it comes to competitors, but I still think that Netflix is best in class. I have subscriptions to all of the major service providers when it comes to video streaming, and Netflix is far and away the best one. There are also a number of other catalysts that I think will be good for Netflix in the long term. Right now, it's quite difficult to separate a company's performance from the economic impact on that particular company. Money is tight in a lot of households right now, and it's quite easy to discard subscription services with very little impact. The fact that Netflix is not only holding on to subscribers, but increasing their subscriber count during this period, I think demonstrates their strength even within these economic conditions. Beyond that, there are experiments in certain geographies of forcing people that are account sharing to pay up, has worked quite well, and it looks as though they're going to start rolling that change out to some of the largest markets, including the US. Netflix themselves has spoken about how they initially see some cancellations because of this, but the net effect over the medium term is that the number of subscribers increase. The other Netflix service that I'm very interested in is that ad-supported tier. I'd like to see how Netflix deals with cannibalization of current revenue, so there might be people that are paying now that decide to switch to the ad-supported tier, but I have a sneaking suspicion that the ad-supported tier is going to be a big money maker for Netflix. I think it's going to be a very high margin avenue. The second company in my portfolio that reported earnings last week is TSM, so Taiwan Semiconductor Manufacturing Company. The performance of companies within the semiconductor industry is very closely aligned to the economic cycle. When times are tough, people buy fewer electronics, whether they be cheap things or expensive things such as cars, washing machines, fridges, etc. This translates into a fall in revenue and profitability for these types of businesses. I encourage you to go through TSM's earnings report, especially if you're someone that's interested in investing in the business. They are one of the most powerful companies, maybe even the most powerful company within the semiconductor industry. And it is my opinion that any weakness within this business is most certainly for the short, maybe medium term, but long term. This is a business that's going to continue dominating an industry. If you look at the 1 week performance of semiconductor businesses within the S&P 500, you can see that it was a challenging week for the bulk of those companies. So how did this affect the performance of equities through last week? Well, we're looking at the performance from the 14th to roughly the 21st, Friday until Friday last. And we can see that there was a slight drop-off in NASDAQ stocks. S&P 500, there was a drop-off, although it was less. The US dollar continues to decline, and this is for a number of reasons, partially because of the expectations around interest rates, but also expectations around a weakening US economy. It's still quite high compared to its recent historical self, but it is coming down. And we can see that the CSI 300, the Chinese version of the S&P 500, had a very challenging end towards last week, and there are a few reasons for this. One of those reasons is most certainly political. So it looks as though the US is preparing new rules. I think they're due to be announced in May that will restrict US companies' investment in Chinese businesses. Overall, it looks as though the rush to invest in China that we saw earlier in the year has abated, and people are a little bit nervous, predominantly for political reasons. This is to be contrasted, however, with the very strong, for example, GDP performance that we're seeing within China. Consumption is rebounding very strongly. The property market is starting to show green shoots of recovery too. But it is fairly obvious that relations between the US and China are not going very well at the moment, and this is keeping investors on their toes. What about the week that we're currently in? Well, there's a smattering of macroeconomic data, but most certainly the 2 points that will be most closely watched will be the GDP number out of the US, as well as the core PC price index number out of the US on Friday. The reason that these will be closely watched is that people want to know that the US economy is still doing okay, despite the tightening financial conditions within that market. The reason that they'll be very interested in this number, the core PC price index, is that this is the Fed's preferred measure of inflation. Now, the last reading came in at a surprise to the downside. It was expected to come at 0.4% and came in at 0.3%. So if it comes in line or close to being in line with expectations, it won't have much of an effect on the market. However, it does have the potential to move the market in either direction, depending on the type of surprise. The other set of events that have the potential to move the market this week will be earnings. You can see that there are some very big names reporting through this week. It's the 24th today. So companies such as Google, Microsoft, Meta / Facebook, Amazon, Visa, MasterCard, all reporting through this week. Corporate earnings in the US through this season have been a mixed bag. However, on the whole, they've been less bad than a lot of people were predicting. I suspect that this is why, even though indices within the US have drifted down a little bit through this month, they haven't fallen off a cliff. All right, that's it for this week. I'll speak to you soon. Have a good one. Goodbye.